In the world of crypto, it can feel like you're just swimming in a sea of headlines and rumors, right? So today, we're going to decode all that recent chatter around MicroStrategy and Bitcoin. We're going to figure out how to separate the real signal from all the noise, all the FUD.
It all kicked off with this, a simple two-word question posted online by MicroStrategy's Michael Saylor. But, as you probably know, in the high-stakes world of crypto stocks, nothing is ever that simple. And this one little post, man, it kicked off a total firestorm of speculation.
It's just wild how a tweet this cryptic can literally move markets. The source we're looking at suggests Saylor might just be having a bit of fun, creating what are called pro-volatility tweets. The whole idea is the less predictable the company seems, the more the stock bounces around, which, believe it or not, can actually help certain trading strategies. It's a calculated game.
And that right there, that brings us to the real subject of our explainer today. This tweet, and the whole swirl of articles that came after it, is a textbook case of something called FUD. So let's break down what that actually means, and more importantly, learn how to see right through it.
So what is FUD anyway? Well, it isn't always straight-up false information. A lot of the time, it's information that's just sensationalized, and it's specifically designed to make you nervous, to make you question your position. It's all about creating that fear, uncertainty, and doubt. Just understanding that this is a tactic is the first step to navigating the market without panicking. Okay, so to really get why a lot of this FUD might be, a little overblown, we first need to understand the nature of Bitcoin itself. It has this really unique quality that acts like a kind of built-in armor against shocks to the system.
And that quality is called anti-fragility. This is such a fascinating concept. An anti-fragile system doesn't just survive stress, it actually learns from it. It adapts and it becomes more robust because of it. The source points out that historically, whenever there's a big market crisis, Bitcoin's dominance has actually increased. It kind of thrives on chaos.
So how does it pull this off? Well, it really comes down to three core pillars. First, you've got thousands of decentralized nodes all over the world, which means there's no single point of failure to attack. Second, there's the massive energy cost of proof-of-work mining, which makes the network incredibly expensive to try and hack. And third, and this is the big one, the economic incentives are all designed to reward people for being honest. Let's just double-click on that second point for a second. Proof of work is basically the thermodynamic engine at the very heart of Bitcoin's security. Miners spend huge amounts of real-world energy to add blocks to the chain. And because they've invested so much, they are highly motivated to play by the rules so they can get their reward. If they tried to cheat, they'd risk losing everything. Okay, so now that we've got that foundation of resilience, let's use that knowledge to defend against some specific FUD. We're going to tackle two of the biggest fears you've probably seen popping up in recent headlines. First up, the big one, the quantum threat. The story goes that one day, these futuristic quantum computers will be so powerful they can just crack Bitcoin's encryption, making the whole thing worthless. It's a scary thought for sure, but let's actually look at the details. But here's the thing. Context is everything. The source is super clear on this. This threat really only applies to a very specific, small set of super early wallets where public keys were handled differently. If you've gotten into Bitcoin any time in the last decade using a modern wallet, this is basically a non-issue. The source even calls it a nothing burger for the average person. And what's more, there's already a long-term plan in place. This isn't some kind of surprise attack. When the threat becomes more real, the network can be upgraded to become quantum resistant. This would probably involve freezing those very old at-risk coins. So yeah, this isn't an unforeseen crisis. It's a known engineering challenge with a solution already planned out. All right, let's move on to the second major piece of FUD. This idea that MicroStrategy could get kicked out of major stock indices, like the MSCI, which would cut it off from huge pools of investor money. Again, the headlines are way scarier than the reality. So let's break this down. All the noise, all the scary headlines, they're talking about the MSCI index, which is a smaller, committee-based index. But the most important index for a company like MicroStrategy is the NASDAQ 100. The source calls it the Big Kahuna. And crucially, the NASDAQ is rules-based. There's no committee to convince. And under those rules, MSTR isn't going anywhere. But here's where things get really interesting. The source argues that this entire debate about stock indices, well, it might soon be completely irrelevant. And why is that? Because it looks like MicroStrategy is building an entirely new financial engine for itself. This is a pretty major strategic pivot. For the last few years, the company has funded all its Bitcoin purchases by selling new stock. But the future? The future looks different. The new model is all about issuing corporate bonds, in other words, debt, and using its massive Bitcoin holdings as collateral. It's a really simple three-step process. Step one, they've already got that lockdown. They have the Bitcoin. The next phase is to use that reserve to borrow money by issuing these bonds, which are secured or over-collateralized by their Bitcoin. And you can just see how incredibly powerful this model could be. I mean, imagine you lend the company $100. In return, your loan is backed by $500 worth of Bitcoin. According to the source, this would be an extremely low-risk piece of debt for the lender, and it could attract a whole new class of more conservative, debt-focused investors. And that brings us right back to the index FUD. If MicroStrategy can successfully build its own capital market, raising money through these Bitcoin-backed bonds, then it just doesn't need to rely on the money flowing in from index funds anymore. The entire conversation becomes, as the source puts it, pretty moot. So as we wrap all this up, the real lesson here isn't just about MicroStrategy's stock or quantum computing. It's bigger than that. It's about developing a framework for how you think. It's about learning to pause when you see a scary headline, to ask the right questions, to look for the underlying principles, and to separate the urgent-sounding noise from what's truly important. And that's really the question I want to leave you with. In an information environment that's only getting louder and more chaotic, how are you going to find this signal? Thanks for digging into this with me.